Sheffield 57, the sponsor of this webcast, invites you to visit our re-envisioned condominium residences.
Good day, I'm Jennifer Malloy, and this is The Real Deal. The MTA seems to be having a change of heart on a key component of the Hudson Yards redevelopment. The Hamptons get some worrisome real estate news. And another real estate tycoon is said to be gunning to take the GM building off Harry Macklow's hands. That and more on this edition of The Real Deal webcast. But first, some highlights from this week's interview. In this month's magazine, The Real Deal looks at several New York City neighborhoods where condo developers are doing an about-face and renting units instead of selling them. The phenomenon, which is happening in several up-and-coming Brooklyn neighborhoods as well as in Long Island City and Queens, could be a sign of a softening market. Real Deal reporter Jen Benepe spoke to David Mondrell, president of ApartmentsandLofts.com, who handled several rental buildings that were originally slated to be condos.
And what we're seeing now is more and more developers are more concerned if their apartments are going to sell at all.
Now the rental prices, are they at market, slightly below market, or?
Record-setting. But there are some developers who are just changing their philosophy completely, not going to even test the condominium waters, and just go forward as a rental.
For the full interview, click on the link below. And now for the news. The Metropolitan Transportation Authority has had a change of heart about what to do with the 26-acre Hudson Yards site it owns on the far west side. After soliciting bids from the city's biggest developers, the state authority has indicated it would rather lease the site than sell it outright, Crain's reported. The magazine also reported that the winning bidder would have to earmark millions of dollars to fund mass transit improvements that have nothing to do with the site. The MTA's rejiggering seems to be a response to public pressure to hold on to the site and take a cut of profits from whoever it chooses as the developer. The Hamptons usually makes headlines for its pricey homes and celebrity sightings, but in what may be the first sign of real estate distress, it seems more homes there have been headed to foreclosure, even multi-million-dollar properties. According to Crain's, about 80 homes are in various stages of foreclosure in East Hampton and Southampton. A Coldwell Banker broker told the magazine that a $15 million home on East Hampton's Tony Further Lane was in pre-foreclosure because of delinquent payments. Still, the Wall Street Journal reports that the summer rental market on the East End is off to a strong start. Move over, Macklow. Hello, Silverstein? The New York Post is reporting that World Trade Center developer Larry Silverstein is gunning to buy the GM building from real estate rival Harry Macklow. Silverstein is just one larger-than-life real estate personality in the running to rescue Macklow, who needs a cash infusion to pay off his multi-billion-dollar debt. Developer Sheldon Solo is also interested in the Fifth Avenue building, and Macklow's broker CB Richard Ellis is said to be aggressively shopping the site around. Bids are due later this week. Lower Manhattan may have achieved a new milestone, at least according to a business group whose mission is to promote the neighborhood. A report released last week by the Alliance for Downtown New York claims that the area had a lower office vacancy rate than Midtown for the first time since it bore the brunt of the World Trade Center attacks in 2001. About 7.6% of offices were vacant downtown in 2007 compared to 7.7% in Midtown, the Alliance said. In the fourth quarter alone, more than 400,000 square feet of office space was leased in the area, including space for 2 major relocations from Midtown. Just weeks after actor Heath Ledger was found dead in his Soho loft, the apartment has quietly been put back on the market. The New York Post reported that the 3-bedroom Broome Street unit could go for $25,000 a month, $3,000 more than Ledger paid. The Brokeback Mountain actor moved to Soho from Brooklyn after his high-profile split from co-star Michelle Williams. His death was ruled an accidental drug overdose last week. A new report by City Habitats found that rentals in the borough shot up by 5.5% between 2006 and 2007. The report comes just a few weeks after real estate group New York found that rents in certain Manhattan neighborhoods were actually down from December to January, a traditionally slow season. It also comes as landlords have been increasingly offering incentives like a free month of rent or promises to cover broker fees as a tactic to draw in tenants. Downtown might lose a media mainstay if the Wall Street Journal departs for Midtown, but it seems poised to gain another national publication. Newsweek is reportedly close to a deal that would move its offices from Midtown to Church Street in Lower Manhattan. According to the New York Observer, the magazine is working on a lease with building owner the Sapir Organization and broker CB Richard Ellis. Vantage Properties, a 3-year-old real estate investment company, has closed on one of the largest residential transactions in Queens. The firm purchased a $300 million portfolio of apartment buildings. The transaction includes 47 residential buildings with nearly 2,000 units and 20 retail spaces. Vantage has been buying up properties at a rapid clip throughout the city. It now owns thousands of units in Harlem, Washington Heights, and Queens. The seller on the Queens deal was landlord Nicholas Haros. Thank you for joining us for this edition of the Real Deal webcast. Remember to click on the link below for this week's interview. Please join us every week for the latest in real estate news. I'm Jennifer Malloy, and this is The Real Deal.